right now, as we do each and every Monday at 3:15, we're going to talk to our man Steve Rhodes, folks. You can check out Steve's outstanding newsletter, Mastering Probability, right under the newsletter tab at TFNN. You can hit that subscribe button. You can sign up for a month for $149, or you can add savings of $199 for a 6-month subscription, or save almost $600 for a year. They all come with a 30-day money-back guarantee, folks. He puts out updates in the morning, updates in the afternoon, weekend updates as well, and you get many great webinars that Steve has put together. They're all listed right there on the order page. Check it out under that newsletter tab at TFNN.com. 30-day money-back guarantee, folks. Can't go wrong. Steve Rhodes, good afternoon.
Hey, Tommy, how are you? And a happy post-Thanksgiving.
Happy post-Thanksgiving. That's always a good one, man. I love how we need holidays on Thursday, Steve, and then half days on Friday, but really they don't even count because most of the people are out of work. I like those types of holidays. What do you think?
That's true. And we also need we also need the Saturdays where you've got this. It's the best day of college football, right?
Oh, amazing, right? And then the Bucks yesterday. There's Sunday, and then I know it's a great day. Thanksgiving's awesome, man. It is. You got family around you, whatever. It's a great holiday, man. How was your Thanksgiving, Steve?
Good. A couple of buddies of mine, I mean, we were all real good friends, stay in touch and everything. And it was just the guys this year just texting each other. And we had kind of a smaller Thanksgiving. We had family that was kind of separated all throughout the country. But one of my buddies, he's down here half the year, up in the Boston area, the other half of the year. 56 people, all family.
Oh, that's so cool.
56 people at Thanksgiving.
That's a fight for that plate and that food in there, but that's great, man. It's like, hey, the more the merrier, as they say, right? You got to love it, man.
No doubt. And we kind of look at each other just over the last decade and all the grandchildren that we've been able to, bring into the world, through our children and so forth. It's really great. It's a fabulous holiday. I wish we did it more than once a year. But
that's the best. Totally.
Yeah, it is.
So what do you think about this market, man? The holidays, we're into December trading already. What do you think, man?
Yeah, and I thought I could bring some nice morsels of information to our listener audience. So this first chart that we're taking a look at, many people are familiar with it. It's a seasonal chart. This is a seasonal chart for the S&P 500. It's over the last 97 years. The bottom left shows you on average by day what the typical occurrence is, whether we close higher or lower. So the S&P 500, the worst day of the trading week is a Monday. We're trading lower today. Nothing unexpected there. And we can see on the monthly basis that November over the last 97 years, has been the highest performing month with December right behind it. But if we take a look at since 1950, December has closed higher 73% of the time. Okay, that's just flat out. 73% of the time, December closes higher. In 17 of the past 20 calendar years, the S&P was positive in December when year-to-date gains exceeded 10% through November. This year, we're up 16%. So, again, just taking a look at that. And then this is also has been even more pronounced recently, meaning that in the last 12 of 13 years, December has been to the upside. So you talk about gambling in New York City. These are the kind of statistics and odds, that they want. The historical odds that December closes higher are roughly 80 to 90%. So folks should kind of keep that in their quiver out there. And as I've discussed with folks many, many times, this is always the thing out there. We're getting ready for a big bear market. The cool thing is, what we do here with regard to pattern recognition is I've been able to go back, take a look at the historical charts for the Dow going back to 1896. And the thing is that every single bear market, meaning a move of 20% or more, has been preceded with a daily, weekly, and monthly topping pattern. In the case of the 1929 top, it was Rhodes Momentum Indicator tops for the daily, weekly, and the monthly. I've got those dates shown here. But if we take a look at where we at today, right? Because who cares where we were in 1929? Where are we on December 1st, 2025? The only topping pattern that I've got for the S&P 500 is a T9 count top. You can see the blue arrow that we've got there. There is no top on the weekly. There is no top on the monthly. In other words, the S&P 500 is not generating any kind of signals of any kind of major top. So that's important for people to understand out there. The same can be said about the Dow. The Dow here actually has, if we look at the weekly and the monthly time frame, we've got confirmed A to B equals CD patterns to the upside that take us towards a 53,167 to 53,468. Tom, you actually remember a decade ago doing a show with your dad and calling for the Dow to get up to 40,000. And it was just simply based upon horizontal trading ranges and A to B equals CD patterns. And now we're talking about 53 to the $53,000 area.
You know, Steve, you said it just so you said it, and in my head, right, you go, oh, man, that's a huge number. And then I look at the chart, and I go, we're right there. We're like five, we're right there. It's like, but yeah, amazing prices, man, for sure.
Absolutely. So another thing I like to take a look at, for confirmation is what are the equal-weighted ETFs, right? Because if it's just the top, if it's a Magnificent Seven that's driving things, you can have some nasty pullbacks out here. If we take a look at the equal-weighted ETF for the S&P 500, folks, that's called RSP. You can take a look at it on your charting system. It has a daily and a weekly top, but the monthly does not. In fact, the monthly chart has a confirmed A to B equals CD that gets us up to 218. I'm not talking about tomorrow. I'm talking over time. It's a monthly time frame chart out there. So even the equal-weighted ETFs for the S&P 500 are suggesting that we do not have any kind of a major top that's out there. On November 20th, you and I, we've talked about the spot VIX index many times. Every now and then it gets out of whack. And by out of whack, it goes into contango. And what that means, folks, is that means that the spot VIX index is traded above all forward future contracts. When it does that, it generates, and this is something that I follow, it generates a ratio. I always compare the spot VIX to the 3-month counterpart, its 6-month counterpart, and a 12-month counterpart. And when that ratio, when it gets in contango and it goes above the +1 level, you're watching for price to dip right back below that ratio, and that signals a bottom. And I've got those bottom patterns out here. It's at least a buyable bottom. Some of them are just significant bottoms that we've never, price never gotten back to before out there. So for the 3, the 6, and the 12-month time frame, they all have given us a buyable bottom pattern. On November 19th at 10:54 p.m., that was when the last lunar phase apogee came in, and the exact price point where price was trading for the ES mini was 67.4725. It's this blue horizontal line. Once price goes above it, it is short-term bullish. This coming Thursday at 6:07 a.m. for those folks that trade futures, you can go ahead and mark the futures price for whatever it is you trade at 6:07 a.m. and keep paying attention to that data point. So right now, the apogee pivot point says we are bullish. If we take a look at all the cash indices, they're all trading above their green oscillator and change lines. That's one of the tools that I teach. That's one of the workshops that subscribers get. And most have also, this is also important, most have rallied for about 5 consecutive days. And that's something important because if I take a look at the S&P 500, the bottom portion of this chart, the black digits are consecutive rallies to the upside, the red digits consecutive rallies to the downside. Typically, especially in a bull market, we see moves to the downside that last 2 to 4 sessions. Well, we've been up for 5 trading sessions, so we're due for a 2 to 4 day retracement out there. Nothing unusual. In fact, you expect it. You need that in order for price to continue to move higher. Finally, when I look at the daily, weekly, and monthly ES mini, they're all trading above resistance time, and that's the top of their daily profiles. So everything that I look at suggests that we head north and that December closes higher than November.
I love it, man. That was a great breakdown. Folks, check out Steve's newsletter, Mastering Probability. I always look forward to the segment, man. You put out such good data. I love statistics and all of it. And, I was looking at that RSP, the equal weight out there.
Yeah.
Oof, on a monthly basis, the volume just clobbered everything as it closed higher in November at like 438 million shares. So volume coming in and where we are. Sometimes we get a pullback, Steve, right? And then I look at it on some of those weekly and monthly charts and you can't even see a pullback because it's just, it's a negative day when all the market does is go up. And hey, Steve, great stuff, man. Appreciate it. Look forward to the program tomorrow and we'll talk to you next week, man.
All right. Bye-bye now.
Thanks, Steve. We're coming right back, folks.